My friends, welcome back to the channel. Hope you're having a wonderful weekend. Hope it's relaxing. I spent my weekend training with K1 Glory and UFC fighter James McSweeney. Guy's an absolute monster, but really helped sharpen some skills that I've been wanting to work on, footwork, drill-wise, and everything like that. And then the plan today is let's get this AMC Weekly video out, and then we're going to go chill. All right? So every time, even on the weekend, make sure you're taking the time to sharpen your skills. Make sure you're taking the time to enjoy your family, and make sure you're taking the time to unplug a little bit. Everything about life needs to be balanced. Everything's better when it is balanced. So I hope you take some time to relax and watch this. If you do, please like and subscribe, tell your buddies about it, all that kind of stuff. Shameless Twitter plug. If you haven't already done so, follow me on Twitter. Easiest way to send me DMs, see what I think is going on, if I get important news or anything like that. I tweet that out, all that kinds of good stuff. Also, too, before we jump into the video, you guys know the deal. Nothing I'm giving you is financial advice. I'm just trying to put out as much educational content as I possibly can. That way you can make the best decision for you that you possibly can. Always do what is best for you when it comes to your portfolio. You owe it to yourself. You owe it to your family. You owe it to your future to be responsible. So please do that. Okay, even if I think I see a lot of upside or a lot of downside or anything like that, don't listen to me. Make sure you do your own DD and everything along those lines, so that way, once again, you can make the best decision for yourself. All right. So, having said that, today this is the weekly outlook video. That means this video is going to be longer. The number one complaint I get on my videos is they need to be shorter. And with all due respect, if anything, I would make them longer. If you're not willing to sit down and listen and learn about it, with all due respect, you don't deserve to have the knowledge that's in these videos. So please take the time to watch it in its entirety to make sure that you actually understand exactly where I'm coming from. So today we're going to look at the option chain. We're going to look at the charts. We're going to look at indicators. We're going to look at everything heading into this week. All right, let's get after it. So, first thing I want to look at is the option chain. This week is a monthly option expiration, so the option chain is absolutely loaded on both sides. Now, why are these weeks important? These weeks can typically have more volatility because these are going to be options that people have bought, far out in advance. Like, for instance, if you were looking to buy out into January or anything like that, you can't purchase options every single week in January. It would be like, I don't know, January 15th or whatever. But when looking at the option chain right now, there's a lot of contracts, okay? So we're going to look at calls first. So right here at $15, there is 23,585 contracts just barely out of the money, okay? Excuse me. Guys, I'm still a little sick too, so I apologize. I'll try to keep the coughing to a minimum. Finally started some antibiotics today. Now, every time I talk about how many contracts are in the money, out of money, at the money, anything along those lines, each contract is considered 100 shares. So just at $15 this week, there's 2.3 million shares essentially at stake, that people could exercise or anything like that. At $20, there's 46,712 contracts at that level. Now, I think buying contracts way too far out of the money, especially if you're not giving yourself plenty of time. If you bought those contracts a year ago or anything along those lines, one, by now, you may have rolled them or anything along those lines, but it's that's pretty far out of the money, in my opinion. Now, the reason that those get bought up so quickly by retail is they're going to be cheaper. And that makes a lot of sense to me, why retail is always buying far out of the money contracts, because they can buy way more and they can have more leverage, if you will, over more shares. The problem is unless you really get this stock moving, then those contracts aren't going to do you any good. If it gets pretty close to expiration date, and let's say, the stock moves up by $1 or something like that. So let's say at the end of this week, AMC is around $14.50. If you're holding 20 contracts, even if it moves up to $15.50, but it's on Friday or anything like that, you're still going to get killed on those contracts. Okay, so if you really want to help when you buy calls, buy either in the money, and when I say in the money, usually $1 to $3 in the money, buy at the money, or buy slightly out of the money. Usually, like, depending on where the stock price is, like $1 to $3 in strikes from being out of the money. And if you do buy out of the money, make sure you buy them probably about 30 days out. But once again, always do what's best for you. Okay? But we have got a ton of interest at $15, and we've got a ton of interest at $20. Now, there's also, a lot at 18. There's a decent amount at 17, decent amount at 16.50, decent amount at 16, okay amount at 15.50. So, and obviously these numbers are all smaller because these are numbers that aren't offered at monthly expiration dates. So that's why, at those big strikes like a 15, a 20, things of that nature, that's why you always see way more contracts at that level. From a put side of things, it's really not that much at 15. So there's 10,325. So we've got over a 2-to-1, because it was 23, right? Is that what I just said? Yes. So we've got over a 2-to-1 at the $15 level. Now, at the $20 level, there's 31,567 puts, okay? So there's still more calls than there are puts at the $20 level, but, there's going to be, some decent roadblocks. If we start to slide, okay, so gamma movements can work in both ways. So if the stock starts to pull back, then you're going to get a reverse gamma squeeze. So like at $13, there's 10,000 contracts. At $12, there's 21,000 puts. So once again, this is why I think we're going to see a more volatile week than usually what we see. So we're either going to see a more volatile week, okay, if the stock price really starts to move. Otherwise, I think it's a good possibility that we could be kind of pinned right where we're at, and they're going to let all those calls above us expire, and they're going to let all those puts below us expire, and just be collecting all those premiums. So it really just depends on how we start moving this week. And like I said, this is where always the people who are like, okay, so it's going to go up or down or sideways. Thank you. But that's the reality every single day. And when it comes to that, it just depends on, once again, how the stock is going to be moving is really, just a little bit down and we could see some big downward pressure. A little bit up, we could see some big upward pressure. So it's going to be an interesting week. I really believe that. So, and like I said, getting pinned this week makes a lot of sense to be collecting all this put and this call premium. So now let's go over here and let's see what the chart is telling us. So from here, this is, if you haven't already, you can go back and watch the last video that I uploaded, and it talks about all these trend lines that I'm about to kind of go over. So we've been forming this pennant right here that we actually broke out of on Thursday of this past week. And then as you can see, we got a decent retest of the top of that pennant, and then we pushed back up. Now, on the push back up, full disclosure, here's what I don't like. I don't like that right here, on our push back up, essentially the volume has kind of been decreasing. You could look at this as possibly a double top right here. I also tweeted out that it's really pretty simple for me that over $14.68, I'm going to be bullish. Under, I'm going to be bearish. Of course, it closes right at $14.66. But this teal line, which I want to make it a little bit thicker right now so you guys can see it easier. But this teal line to me is very important. Obviously, we had a rejection point right here. But if we zoom out and we come back over here, I'll just go to the hourly, back over here, This is where we got rejected down before coiling back up for the June gamma squeeze. So above this line, I'm going to be pretty bullish, or my bias is going to be bullish, if you will. Below that line, it's going to be a little bit bearish. I'm worried. My concern is that this is going to turn a little bit distributive here. Okay, so I really wanted, and you can see we almost got rejected at the exact same point before that June run that we did right here on our day where we pushed up real hard. Okay, and I mean, there's almost to the penny. And then on Friday, right before it closed, we pushed below that. So my concern would be coming back down here, coming back down here, maybe retesting the top right here, maybe pushing back up. If we start to create some lower highs, then the next time we would break through, then we come back up and retest, then we push back down. That would be my concern of what our downside movement might look like. Now, I have always said before, if you're not new to the channel, you've heard this before, but I've always said before that stocks are kind of like lungs. They need to be able to breathe in and breathe out. And obviously we had a huge move. We had a 15% move right here. So some retracement of that move makes a lot of sense. So if we do a local fib, then the 382 would be, a very bullish retracement. The 382 would take us down to about $14.12 in that range. And as you can also see, the 382, which is going to be this one right here, also pretty much takes us to the top of the trend line of the pennant that we just broke out of again. So that type of retest wouldn't surprise me. So another one that we all know AMC likes a lot is going to be the golden pocket at 1338. I called out exactly, so I was both exactly right and exactly wrong last week. The move that I called out from right here, which I think it's this one right here. Yep. So here's going to be our more macro fib of the range that we're in. I said we would come down here, we would retest, and we would probably push back down. But I did say that I thought this would pretty much be all of last week. It would kind of take a little bit to push up here. And instead, it all happened on Wednesday. It happened super fast. It just pushed up, dropped straight down. I mean, look at these candles right here. Dropped straight down, hit the 618, literally to the penny, and then started pushing back up. And then as you can see, every single fib retracement on the way up has red candles. So this is why fib retracements are so important to know and understand. So now we're coming back here and we're going to touch right around here at this 1460 probably. It would be great to see, that's going to be the macro 236 at 1461. It would be great to see a reaction right there. That's really kind of the most bullish on the more macro scale. The more micro scale, would be coming back here, excuse me, and retesting the top of the range. But if we look at the indicators, so looking at the RSI, I think, of course, can't have that many up there. We'll just get rid of that one for right now. Okay, so the RSI is a little concerning to me too. Typically what you want to see when things are moving pretty bullish is you want to see reactions like this. That once it gets down here to about that 50 range or so, then you get a good positive reaction. So the RSI always needs to cool off. But once you get back here towards right around 50, you want to see a good reaction and it start pushing back upward. However, now after the close on Friday, we're at 46. So it's still not the end of the world. But if, for instance, the RSI, if it pushes back up here towards 50, and then it gets rejected off of that, then I'm going to be pretty confident that we are going to see some downside moving forward at that point in time. So it's really kind of if this happens, then I think this is going to happen. So when we look at it on the 5-minute scale, then this is what I was showing my Discord. Pretty much we've got this bear trend, working against us right now. So if the RSI, if it comes back up here towards right around $15, if we then get rejected, also if we start making a series of lower highs and lower lows, that's going to be what's concerning as far as short-term downside. Now, once again, just because it's short-term downside does not mean the macro larger move is going to be over. It just means there's some short-term downside coming. And there's nothing wrong with that. All right. So that's a little bit more of kind of the micro look. Now let's get out here and let's look a little bit more macro. So once again, we had the break from this bear flag right here. That's going to push us down. Or excuse me, this bear flag, this trend line is the one that was pushing us down. We had the break. Now, once again, full disclosure, all of these breaks of the levels on the way up did happen faster, like I said, than I thought that they would. So now we're right here. We broke through that big, kind of 1467 range. So now I think our next big level of overhead resistance is going to be right here at the $16 range. You can see before we broke down, we traded from, let's see here, April 26th through May 5th. So probably about 10 days or so pretty close to 2 weeks, we traded in this range. You can see it was resistance here. You can see it was resistance here. You can see it was support here. So this $16 range, I think, is going to be our next level. So you can also see right here, we needed a RSI cool off on the 1 hour. So now it's sitting at 61. So there's room to push back up there, even if it comes back down a little bit. So like I said, micro to me, when I look at AMC micro right now, things look more bearish than bullish. However, the more macro that I get, the more you zoom out, I think things look more bullish than bearish, okay? So I'm really kind of looking at it from two standpoints right now. The reason, obviously, once again, like I said, that this line is so important is going to be because it was our massive resistance before the June run. It was a lot of support, even the support we had this spring before we ran to 34. So north of this line, like I said, overall my view on AMC is going to be bullish. South of that line, overall my view is going to be bearish. Now, another important thing that we've got coming up is on Wednesday, we've got the inflation data that's going to be coming out. I personally think that this could be our first release in a long time that potentially inflation looks like it's starting to be more under control. If that happens, if it's flat, if the numbers stay flat, or if they go down, showing that inflation is not constantly growing, then I think we could see a pretty decent sized overall market rally. If those numbers show that inflation is not under control and inflation is still rising, then I think we'll probably see a pretty large dump. So Wednesday is going to be an important day. So if you do things like, selling covered calls or puts or anything like that, it might be a good idea to wait till Wednesday for that. Or if you play anything, play it Monday and Tuesday, close it out before Wednesday. I personally am not really looking to have any positions open on Wednesday, and with the news that I have now. Okay, obviously things can change. Everything can change literally in a second. That's why I always say you got to be prepared and ready for all of that. So if we're looking at overhead resistance, we're looking at this 16 range. How did I come up with that? Well, I'm using the fib extension, and I tweeted this out, I think on Friday, but so not only did I already show you where that teal line shows a lot of resistance for us in the past, but I'm going to hide it for you real quick. And that's why I said, all right, let's go see what's going on up here. So how you use that trend-based extension is you go from your lowest low, which would be right over here on May 12th, to your highest high that we've had so far. And once again, this is looking at in that particular range that we had over here on May 31st. And then you go to your next lowest low. As you can see, once again, we're meeting major resistance right up here at the 618. But once it broke through this on Friday, that's when I was like, all right, it's time to go see what's coming up here at about 1609. And when you do that, Oops. There we go. Oh, whoops. That's the wrong line. It's this one. Yeah. Yeah. So once you do that right here, I knew something wasn't right there. Apologies. Right here, it lines up exactly with the 786 of the trend-based extension. So that's it. That's why you got to know your fibs. You got to know your supports. You got to know your resistance. So if we can get back up above $15, and especially if we have a little bit of decent volume with us, then we can expect a push up here to the $16 range, and that would be nice to see this week. That would be my bullish case scenario, is going to be that we stay above. What I'd really like to see is just right here, kind of make a, once again, these little J shapes, just kind of make a rounded bottom here, push up towards the upside this week. Love to see that move this week. That's what I'm hoping on. Okay. And then once again, we already talked about the downside move. Now let's look at some bigger picture. So now I'm going to go to the daily. Oops. And let's look at some EMAs. And honestly, for me, this is where AMC is really starting to look good, okay? So if we look at the simple moving averages, you can see that we're about to have the 20 cross over the 50 on the daily. On the 1348 crossover, same thing. About to have a crossover here. That's obviously a very bullish indication. Look what happened back here. When we had the cross, when it started curling up and pushing, we had that big run up to 34. So that looks great. On the Bollinger Bands. So you guys know that follow me. I talked about how tight these Bollinger Bands were getting. That's indicative of a volatile move. So far, that move is pushing towards the upside. So that looks great. Also, too, let's look at the volume. So, and I think I did this on my previous video, but we're right here at some important volume traded ranges. We really want to see this stock start pushing up and start eating up these liquidity gaps right in here. That's what we would like to see, okay? When we look at that, which I forgot to do this earlier, but when we look at this from a more local standpoint at our current range, then you can see that we've got some decent gaps to the upside, okay? So I would like to see, once again, us start pushing up here and exploring these liquidity gaps. If we get really, really, micro range right here, then all right around in here, this 1450 to 1460, has got some decent gaps. So, like I said, a lot of reasons for me to be more bullish than bearish on what's going on, especially with what I think is going to happen in the overall market. I think the overall market, we've got some room to still keep pushing towards the upside. So on the weekly chart, and then we'll jump into the cycle chart after this. So on the weekly chart, AMC, you can see right here that the 20 simple moving average acted as perfect resistance on the weekly chart. So getting above that, which is going to be closing this week above about 1530, would be great to see. When we get on top of this 20, you can typically see good things are happening when we're on top of it. We're pushing to the upside. When we get underneath it, bad things are going to be happening. Okay, so I would definitely like to see that. So those were the simple moving averages. Like to see us start regaining the 20-day here, 1589 on the EMAs. One thing I want to do is let's go back to the daily real quick. What was great to see on Friday, I'm going to get in here so you guys can see it, is that 50-day acted as perfect support for us on Friday. Very encouraging to see. So now what we want to see is we want to see a continued curled up where this 20 is going to start crossing over the 50. Once that 20 crosses the 50, that's going to be pretty bullish. So it's just, we just want to keep trickling, on and up to the upside, okay? Obviously a break below that and these EMAs are going to start curling down, and that's going to bring in selling pressure at that point in time. So it really does look good, okay? It really does. I would say I'm in the 60-40 bullish to bearish as of right now, because like I said, I think we're going to get decent market data. So, and here's what you guys can see what I'm talking about when I was talking about that RSI. So right here it got to 44 and then we bounced. Then here 45 got a bounce. Up here 47 got a bounce. So we're making higher lows on the RSI and higher highs on the RSI. This is showing great positive momentum. Once again, looking at it macro, looking at it on the daily. So you guys know, if you follow me, I'm always way more macro than micro. So macro wise, the big picture, if you will, things look great for AMC right now. When I look micro, things look a little bit more distributive and potentially a little bit more bearish. So that's why I'm leaving room for the bearish possibilities, but overall, I'm liking what I see from a bullish standpoint. Now, last but not least, let's jump into the cycle chart. So you guys who've been following me for a while know that when I talk about cycles, not everything is going to be being a 1-for-1 or anything along those lines. What I'm looking for is I'm looking for certain levels to be met, okay? And that's always going to play out differently. So here is what I think AMC is going to be playing out. So back before the June run, it pushed up here towards its first bear flag before, once again, these are those J shapes that I'm talking about, that we want to see. Everything about this move is taking longer and it's slower, but so far it's still playing out all these similar levels. So you can see right here, once we had our lowest low right around earnings, then it slowly and steadily pushed upwards, had an upwards accumulation before, once it broke the resistance. Sorry, I always forget where my arrows are. There we go. So once it came back up and it broke that resistance here, okay, which where the orange line is going to be, then it really started moving. And then once it got to the top of the range right here at 12, then it held right here a little bit longer before it really started, pushing up and moving. And then it went to what I call the launch pad, which is it pushes up, comes down here, retests the top of the range, gets that rocket fuel, and then boom, gone at that point in time. So this is what I'm looking for, is a similar move. So what's that similar move going to need to look like? Well, let's zoom out here just a little bit more and I'll kind of draw it out for you. So we've already had, so you can see this blue arrow and this blue arrow, we've already had the touch or the test of that at that $16 level, okay? I just showed you, based on the fibs and everything like that, that's our next level of resistance that we want to push through. So what I want to see is I want to see this J shape right here continue. And then it would go to our next level of resistance, which is right around the $19 range. You can see right here, this little bear flag. So the first push up touched the first bottom. Then it made a J shape, pushed up to the next level. So I want to see this J shape push up, and that would be, right around that $18, $19 level. Now, what happens after that? What happens after that is another kick down. So then after this one, we would get another kick down, probably come down here, even break below just slightly, and then start circling back up. All right, then we would come up here. The big level for me is going to be right around that $22 level. Then we would get kicked down one more time, and then from there, then we would go pretty quickly up to around that $31 level, and then that level would turn into a little bit of this motion, then we would be pushing up back up to that $50 level, then get kicked back down to the 30s, and then hopefully we'd see our next big move. So overall, that's kind of the movements that I'm going to be looking for. Now, this has taken a while, okay? Where this one over here was only April 8th through June 2nd. This one right here, we're talking this started in January. So I do think it's going to take some time. The number one question is, do you think AMC is going to squeeze again? Do you think that, there's still upside? And yes, I promise you, I wouldn't waste my time. I wouldn't deal with you freaking trolls or anything like that if I didn't think I was helping people and if I didn't believe in the play. That's just not who I am, okay? So I will be in this play until I don't believe in it anymore. And like I also have always told a lot of you guys, my play on AMC was not just about the squeeze. For me, a squeeze would be a bonus. I absolutely love movies. I love sharing, movie experiences with my family and other people. I just think there's virtually no better experience or way to watch movies other than a packed theater. It was so awesome watching Top Gun, Thor this past Thursday night and everything like that in a theater where everybody's, laughing and crying and just having a great time together. There's nothing better than that. So that's where I started. It's the whole reason I made a play in AMC. It was a stock that was beaten down by COVID. I felt like theaters were going to make a comeback. That's absolutely what they are doing. So it's a great investment as far as I'm concerned. And like I've told you guys, I bought AMC all the way down from $2.92 and I've bought shares at $68. So, and everything in between. So it is what it is. I'm a long-term investor. I'm not worried about tomorrow. I'm worried about where am I going to be, 10 years from now. And if I take little steps each day, then to get to where I want to be 10 years from now, then I'll achieve my goal. All right. So this is going to be what I'm looking for really macro-wise, the type of moves that I'm going to be looking for. And like I said, not everything's going to play out one for one or anything along those lines. But as you can see, me just kind of drawing out that chart, that leads us to like October. Obviously, we've got earnings on August 4th. Look how that would time up right there before a big push up back up into the, the 20s potentially. So I think we could see a little bit of run here in July. Then I think we could see a little bit of a pullback, and then we might get an earnings push. Then we'll probably get a pullback after earnings, then another push, things of that nature. So that's what I'm looking for. A weekly this week, if we start seeing some good upside moves, we could see a push, all the way up here, to this $18 range. That's definitely a possibility. My perfect goal would be at least getting up to around 16 from a bullish standpoint. And once again, continuing to get right up here, right to this resistance. We know how much AMC loves her cliffhangers. She closed on a perfect one. So, it really is. It's just going to be, calls above certain level. And then if you're a put player, you'd play puts, below a certain level. I don't buy puts on AMC. I've already told you guys that, so don't stress. I sell puts. And no, you don't have to buy puts to be able to sell them, okay? Learn what the wheel strategy is. That's going to be everything for me this week. I'm probably forgetting stuff after I make these videos. I don't ever really plan them out. I just kind of want to sit down in front of the charts and look at it with you guys and sort of chart in real time. Probably forgetting something. If I do, I'll definitely tweet it out. Once again, please like and subscribe to the channel. Let me know if you have any questions. Overall, much more bullish than bearish. I would say I'm 60-40 right now. And I think we might get a good rally this week due to the inflation numbers that come out on Wednesday. But be smart on Monday and Tuesday, okay? I'd be careful about holding anything overnight going into Wednesday unless you've already trimmed, taken some profits or anything along those lines. But I hope you guys finish out your Sunday and have a wonderful weekend. And I will see you on Twitter and in the markets, all right, all this week. You guys have a good one. I appreciate you guys.